Hello everyone, welcome to our YouTube live analysis, and at the same time it's the first time that we are multi-streaming in every single Facebook page that we're holding and in the YouTube channel. So today we have a live commentary on the ahead actually of the retail sales in less than 30 minutes time. So the key event of the day, of course, other than the gross domestic product from the Eurozone and from Germany, is the US retail sales, especially because the markets are actually forecasted quite a significant drop in the April retail sales. Actually, the markets are actually forecasting around 12% or even 13.5% and decline on April's retail sales for US. So this is something that, of course, not related exactly, it's a result actually of the mandatory shutdowns and that depress, of course, the retail sales and its components as well. I mean, auto factor is also ex-auto drop is also a component of retail sales. So we will see that the mandatory shutdowns depressed retail sales components sharply. This is what is expected to be seen in today's outcome. So if I just let me just quickly share my calendar with you. So here we have. Okay, great. So you can see, let me get rid of my title over here. So we have seen so far the gross domestic products out of Germany and Europe, retail sales, significant drop in China, and we are looking forward for retail sales later on. As I mentioned, the markets estimate around negative, so the drop of 12%, but there are also some estimates up to 13.5%. So since we have plenty of time until the retail sales, let's go through what happened so far today and actually what we have seen and how the markets reacted on today's and overnight data. So I will actually start from the earliest data. So we have earlier, in the morning, the European session, we had seen the German gross domestic products and the employment and change as well. So we have actually another confirmation of contradiction in the Eurozone. So we had the preliminary first quarter data out of Germany showing that the economic activity is contracting by 2.2% in a quarterly basis, in line with expectations, but leaving the working day adjusted with an annual rate down to negative 2.3%. So that really made clear that Germany is officially already in recession. So the contraction in the second quarter was mainly driven by the impact, as you already know, of the lockdowns, first abroad and then in Germany, and now we have seen weighted on both exports and domestic demand. So the overall contraction was the sharpest seen since the financial crisis, and that why I emphasize so much on the past news, because all these are giving us signs that the second quarter data will likely to be even worse. Okay, so since we are seeing such a sharp decline in the economic activity, and also in the official unemployment data for the first quarter, and suggesting a roughly stable situation, all these actually indicate that we don't have the worst behind us yet, at least from the economic perspective. So that was from Germany. Later on, we had the European change and the gross domestic preliminary gross domestic product for the first quarter from EU. So Eurozone confirmed a negative drop of 3.8% in quarterly basis. Sorry. So it was again as expected with the forecast, but again, it is already clear that the second quarter numbers will look even worse. So let's actually, since we are discussing about euro, let's have a look on the on euro actually. So let me just quickly. So let me just quickly shift my my screen to okay. So here we have the so here we have the dollar index first of all. So as you can see over here, initially since Asia session yesterday, overnight, if I could say yes, sorry. So we have seen that the dollar index slightly lose some momentum and decline slightly below its 147 territory, but it found support above its first support of the day at the 118 level, significantly still trading well above the 100 area. So it seems that dollar, despite the decline that we have seen overnight, the slight decline remains on bid. So right now, ahead of the data, has jumped to 100.47 and is actually trying retesting yesterday's highs again. So right now, and the last actually 5 hours, we have seen that dollar remains on bid and sustains some positive sentiment. So apparently is the safe haven demand as it seems. So that's why we have also nearly all the major currencies drifting lower. So as I was telling you, let me just double check something. So for euro over here, we have seen that the asset moved below 108 territory, crossed below its pivot point, and is actually ready to move further to the downside. So ahead of the data, we have seen that dollar gain ground and the downtrend channel for euro dollar decline is right now actually is sloping to the downside, and the downtrend channel continues. So sorry, something's wrong with my still here. Okay, perfect. So right now down to 1077 and continues. So sorry for that. I'm facing some technical problems apparently. I'm not sure whether you can see me and hear me loud and clear. So let's have a look. A euro dollar, you should something that I repeat again and again. You should bear in mind that euro is struggling to gain any momentum, because first of all, we had all those contraction actually picture from Eurozone. So that kept the euro dollar and the euro under pressure for actually, let me just 8 days in a row in below the 20-day moving average. Don't forget that also we had that chord between. So we had, let me put me, hello. So we had that weird legal situation between the German Constitutional Court accusing Europe that they acts illegally in regards to the bond purchase and the quantitative easing. On the back, there's a reaction from the European top court. They said that we are the top court. We are on the top of every single constitutional top court, as well. So it was that the fears of second wave, of course, because we have seen that Germany is having new infected cases all the time. The total death tolls is still quite high, and that's why Eurozone actually. It's in a weird situation. It's actually just a step before we announce officially that it's in a recession. We have today Germany actually making clear that it is already in a recession, and Europe will actually follow, because Germany is the largest economy after all. So we have seen that the headline inflation rates in Germany and Eurozone are very, very low at the moment because of the impact of the global slump in oil prices. So we have seen food price inflation down. And at the same time, official data has to be complied in the absence of up-to-date services price because of a large part of the sector has been shut down. So clearly, there will be a slab in the investment, which could actually reduce the potential growth lasting. So. That's today. Today's actually detailed numbers from Germany. Weighted further on the euro. I will take you back to the chart. Sorry for that. For some reason, I don't have the. I cannot see any comments. I'm not sure whether it's my multi-stream service. So at the same time, I'm trying to contact with my colleagues. So trying to help, I assume. So what I was saying, let me flip quickly to the chart. Sorry for that. So Eurozone for nearly 2 weeks' time under pressure, and the euro as well. So right now, the key level to be watched for euro dollar should be these three down fractals and the 107.55 or even lower at the 107.27 territory, which interestingly is my second support and the third support of the day based on the pivot point analysis. So let's flip to the intra-day picture down below the pivot ahead of the data. We have another 16 minutes to go. However, the overall picture remains to the downside. You can see the momentum is still negative in the daily picture, and in the 1 hourly time frame, it has activity over here is close to zero, so suggesting consolidation. RSI on the flip side is actually at it's at 73 below 50. So this actually will suggest negative momentum. But there is quite a weird picture. Is a negative to neutral intraday in the 1 hour chart. Let's flip to cable, okay, which was one of the biggest losers so far today, and actually not so far today only, but also in general. The past, like if I put the daily chart on the past 2 weeks, after rejecting this double top, it is moving further to the downside right now, and today has managed to broke down again below 122, shifting to the downside, and actually is right now is below its first support of the day. So you should be aware that let me bring you back to me again. So you should be aware that other than all this uncertainty that we are seeing in the market and all this negative news, and also we had earlier this week, if I'm not wrong, let me just confirm what I'm saying. Earlier this week, yeah, indeed, we had the gross domestic product out of UK as well. It was on Wednesday, and we had the industrial manufacturing PM production as well, drifting to 8% drop in the industrial production in a year-on-year basis. And the gross domestic product in the monthly basis was down to 5.8%. So contraction in UK as well, recession in UK as well. But nonetheless, you should be aware that sterling is quite it's not only heavily traded against dollar, but it's also heavily traded against euro and other currencies. Sorry. So the downward trajectory for sterling pound actually is approximately decline in global stocks. So there is some kind of a quite close correlation of the UK currency with stocks during the pandemic crisis. So don't forget that UK is very, very high. It has a very, very high infection rate of coronavirus, with high death totals, and also these meant that the country is really behind the pack in terms of reopening its economy. So these, along with the UK's opening economy and the high current account deficit, and let's not forget also the continued risk of the UK leaving at year end the post-Brexit transition membership arrangement with the EU's single market. All these have actually weighted on the pound and triggered some kind of a favored major currency short recommendation. So also something that actually weighed on pound like was yesterday and also on Wednesday was some comments from Mr. Ballet from Bank of England Ballet with now which actually spread actually raised expectations from the markets that the Bank of England policy will probably announce in their next meeting an expansion of the current quantitative easing program. So a more speculative view is that the Bank of England will also be considering going negative with its policy interest rates. So that all these, a combo of things are actually waiting on the pound. So let's just have that in mind. Overall, given this backdrop and the dollar's safe haven status, there is actually the risk of cable revisiting 120 territory. So you have seen it broke this like more than 1 month support level at 122, is moving for 2 days, two consecutive days below that, and hence the next immediate level to be watched could be the confluence of this fractal along with the 38.2% Fibonacci, and the third support of the day at 120.97, while if it hits that level, the next level to be watched will be the round 120 territory, round key number to be seen. Okay, so that was for cable, down below the first support of the day. So the next level to be watching intraday is the 121.30. My second support of the day, quite correlated and clutched with my, sorry for that. Okay, here we are. My kind of a regression channel that I have. So already testing that. Actually, already testing that. So a break of it could take us down to 120. Let me just have a. Okay, let me fix a bit the charts over here. Okay, so let's flip. We have less than 10 minutes until the retail sales. So let me quickly check. Okay, I have some questions, but apparently for some reason I cannot see them in my chart over here. So I don't know what's wrong with it, but okay. So let me quickly. So apparently I have a question from Mr. Raja. USA 104-hour chart, please. Okay, so he's interested in USA 100 over here. USA 100. Okay, before we go through the charts over here, I would like just to quickly, because we have less than 8 minutes until the data are out, just to give you an understanding why they are so significant, and just to highlight that over here that remember that so far we have seen the trade price indices suffering major declines in April in the US. I'm referring to the United States, of course. So we had trade price indices revealed a big April decline so far, combined by a huge April's drop of inflation, of producer price index, and also particularly a weakness in the petroleum and food components. So these, along with also a fall of the import prices, and a huge drops in exports as well, could actually provide us could actually confirm once again that it's unlikely to see any stabilization in the market anytime soon, and that the ongoing headwinds from demand destruction with global shutdowns might follow due to this, if of course we've seen trade prices stabilize. So other than CPI, inflation, PPI that we have seen so far, the trade price indices, a significant decline in retail sales will automatically suggest that we'll see consumer confidence falling. We might see declines as well, further declines in the employment, and more precisely in the construction employment, because remember, retail sales, a big part of retail sales is the construction material, also vehicle sales as well. So that's why the forecasts are quite significant. The forecasts are actually suggesting a huge blank, because we have seen already significant declines of construction employment, significant decline that actually suggest and pressure the risk to the downside for building material sales as well. Also, we have also we have seen actually a comparison, a relationship between the actually the gasoline service, the vehicle sales, what else? Uh, uh, that nothing came to my mind. Okay, auto components as well. So we have seen that they are sharply lower. So all these pretty much confirm that we're going to see a very negative reading today. Also, the savings rate is something that I missed. The saving rates is inversely correlated with monthly retail sales. Okay, so as spending gains is relative to disposable income, so we might see saving rates to surge, because as retail sales fall, saving rates tend to move higher. So that could be an opportunity for the people to save some money to and to the shutdown to cap a bit the spending opportunities for them. So retail sales, consumer confidence, and stocks are very well correlated. That's why I wanted to cover, because of the question from Mr. Raja regarding the S&P, the USA 100. I wanted firstly to say that retail sales is of extreme importance today, because it's very well correlated with stock performance. Okay, so that's why it would be interesting to see how the stocks will react. And because at the same time we have Michigan sentiment as well, which is already down to 8 years lows, if I'm not wrong. Okay, so the sentiment is more or less to the downside. And any surprise today will have an immediate impact to the bond yields, stocks, and FX moves. So a positive reading today and above expectation could help dollar and bond yields as well, while a downwards reading missed today will add further pressure on the bond yield and on the dollar as well. So okay, let's flip to the USA 100, like Mr. Raja asked. So okay, I will start with the daily picture. 2 days down, find support for 2 days in a row at the 20-day moving average, closed higher yesterday, but today is sharply to the downside, rejecting, if I could say, rejecting this area between 50 to 61% from the down leg that we have seen from the top, the 9300. 54 top over here, down, holding. This is the 20-day moving average, by the way, in the daily chart. So we held the floor over here, boosted to the upside again, didn't manage to sustain gains. So it turned back down again. So the US equities in general have tumbled a bit, relinquishing earlier modest gains that we have seen as the US and China trade tensions are back in play again, and they add worries over a second wave of infections along with the weak data. So despite the swing to the upside that we have seen overnight, okay, we have a huge decline because there was a Reuters report actually that saying that the US is looking to block global chip makers from supplying Huawei, and that is something that added pressure on the equities. So I should say over here that this rally came on the gains from some banks yesterday. Okay, so we had we had gains on American Express and United Health Group, which actually led the Dow higher. But Reuters report regarding the regarding the scenario of a block from the US on the chip makers from supplying Huawei is something that shifted down the US equities. And that's why right now Dow is below pivot, retesting the first support of the day. But what triggers my attention, my dear Rajar, is the fact that the Bollinger Bands are not looking lower. They are looking higher. So there is a bit of limitation somehow. Maybe it's ahead of the data. Don't know what's going on over here, but okay, the data are out. Okay, let me quickly go through the data. Sorry guys, let me share the calendar with you. Come on, where is it? Here it is. Let's share the calendar. So the data are out. Oh my god. Okay. In the retail sales, ex auto are at 17.2% drop. It's like double what was expected. More than four times than higher than the drop last month in March. The numbers over here revised lower as well. Over here, the retail sales control group it's down to it's blanked actually to 15% decline. So down the retail sales, overall retail sales, including autos as well, they have blanked to 16.4% decline. So that's a huge miss actually. Okay, let me just quickly have. So that let's go back. A huge decline over here. Let's see what's going on in the markets right now, and the dollar index, even though it's quite early, but we have just the data were just out right now, so there's no reaction for the time being. It's just 2 minutes away from the data. The US index is at 147. A very, very negative data from US, actually well above the forecast. Remember, I said that the forecasts are actually they were actually expected. Sorry, I'm running out of steam a bit. So, as I was saying, we were forecasting around 12 to maximum 13%, 13.5% decline. So, so that is something that should wait further on the and I will put the highlight over here so you will see the retail sales data series is back to 1992. So that's it, guys. 28 years back. So that's a significant miss. And it's actually, nonetheless, the control group is also blanking as well. So all the headlines are nasty, are hustling, with the control group also down. Let me check for any headlines from the news. Struggling so far to put a post above 100. We need to wait a bit. This is a 30-minute chart. We need to wait a bit to see any reaction. But definitely the last two sessions in the 14-minute chart, it has rejected the 100. It's a strong resistance level. It's turning below that, but we need to be a bit patient. There is not a lot of, there is a bit of indecision as it seems. So let me just double check what's going on. Excuse me. Let me quickly. Let's have a look to see. Okay, let me hide that for now. And so let's check the dollar, I would say that I would like to check a bit of a commodities to check whether there is any sudden reaction on that. Yep, indeed. So ahead of the data, let's flip to the 30 minutes chart. This is gold ahead of the data, but also now that the data are out, the gold still slopes to the upside. It broke the 1740 territory, and remember that back in the daily chart, the high that we have seen back in April 23rd, was it, is the 1748 level. So it managed to break above 2 days highs. Okay, and if I put my daily chart on, it managed to break the resistance that we have seen back in April 23rd, April 24th, April 60th. So the next level to be watched will be key over here. That's 1478. So apparently, so far, a quick reaction. We have seen a quick reaction on gold. Say have an asset. So, and don't forget that yesterday on the retail sales, on the jobless claim, gold spiked higher. Okay, because despite the big number that we have seen in jobless claims, from a human perspective, as the Royal Bank of Canada stated, the big number for jobless claims, which came despite the fact that it was around 3 million, however, it came below previous months, has been interpreted by people, by investors, as a signal of more stimulus, okay, and continued lower interest rates. And those two things, sorry, I'm running out of steam. Those two things, and I'm referring to the low interest rates and the more stimulus, are friendly for gold. So this could be something similar with what's going on right now. We have a boost of gold because this is another confirmation that Fed needs to do something. He might needs to be forced to enter negative rates. He might needs to announce further more stimulus, like Japan stated, like New Zealand as well, and so on. So remember, Powell on Wednesday stated that we don't see negative interest rates will not go negative for this year, but maybe they will have to do something. They will be forced to do that something because the data are extremely negative. So let me just check a bit your questions. Oh, there are a lot of questions. Okay, my colleagues trying to send everything to me. So let me check quickly for you. Okay, just quickly, let me go through the questions. And let me watch the headlines as well. Maybe we have any further news. Okay, we had the Empire Manufacturing out as well. Better than expected, but because of the Empire Manufacturing Index came better than expected at 48.5. This against the 60, but okay, you can understand that the retail sales are in focus and they are in the highlight of every single trade right now. So okay, let me check your questions. It's a shame that I cannot share them. Okay, so we have Miss, I'm not sure, Forexia is okay. Ons. Is it a buy or sell? I'm not sure for which asset you are referring to. I assume you are in the USA 100 that Mr. Rajat mentioned. Okay, please, what pair is that? It's a shame. I cannot watch your questions, so I'm not sure what you are asking for. So that's gold. Okay, that's gold. Before gold, we were on the Dow. So we were in the Dow. Dow remains on the downside. So this is Dow, guys. Okay, Dow. You can watch my screen over here. Is Dow. Okay, as a USA 100. down, two very big candles. Didn't manage to break the first support of the day, but because these candles are extremely big, okay. And if I just quickly add my Fibonacci on, my MACD on, you will see that there is a very and aggressively positive momentum has aggressively detected. So that suggests that the bears are are pushing to the downside. RSI is at 37. Flattened a bit in the 1 hour chart, so that suggests a bit of a consolidation for the time being. But yeah, the picture remains negative. If the first support of the day breaks, then the next level to be watched will be yesterday's low. Okay, that was for Dow. Sorry for that. And just to highlight before I move on to the next questions, that if USA 100 closed today below the 20-day moving average, then we should really focus on the last week's 2 weeks ago's low, and the 23.6 Fibonacci level from the up leg. So euro dollar, someone asked for euro dollar. Was yuans. Okay, is it a buy or sell or sell? I cannot really tell, but what I could definitely tell is that since yesterday, so this is euro dollar, guys, okay? Euro dollar. So since yesterday afternoon, actually since yesterday in general, you have seen that it's like choppy sideways between 108.20, one fractal, retested twice, retested 3 times today, and in a range market between 108.20 and 107.77 range market, which just managed to break it. So at the top of the hour, as soon as the candle closed, if it closed above this level, then this could suggest some positive momentum. So the rise of positive momentum. However, RSI also complies with this picture because it managed to break above the RSI, above the 50 level, the neutral zone, so, and it's sloping to the upside. This is the 1 hour chart, okay? But MACD is flat, so still suggesting consolidation. So we need to see a decisive close above those 2 fractals, guys, okay? We need to see at the bottom of the hour, at the top of the hour, sorry. So in less than 15 minutes, the break of these fractals in order to suggest that the neutral picture has changed to positive. And in my opinion, we need to see also the same thing from momentum indicators. So the fact that MACD is still flat is suggests the consolidation is still a scenario. So let's have a look on the moving average. What the moving average have to tell to us. So let's have the fast moving average. Okay, we have a bullish crossover here from the 5 and 9 exponential moving average, but since this candle hasn't closed yet, we don't have a confirmation. So we need to wait a bit to see whether those 2 lines, the 5 and 9 exponential moving average, will continue to the upside. If that's the case, then this suggests positive momentum. Okay, that was for euro dollar. Muhammad is asking for pound Swiss. Okay, pound Swiss. Let me just pound Swiss. Pound Swiss. Let me find pound Swiss for Muhammad. Here you are. Pound Swiss, guys. Pound Swiss. So daily chart. If I just get rid of these pivot points just for a second, just to be clearer. Downtrend for 2 weeks, more than 2 weeks. After the top over here, it declined, and significantly, something similar with my cable, it broke April's support level, which was the low territory. The support level for April was 118.68. Okay, so it broke it and is moving below that today, and actually retested yesterday and on Wednesday. So for the 1 hour chart over here, big hourly candle prior to the data, drifting below 118.68, breaking that April support. And we have seen that the asset is like in a down channel since Asia session, with my fast moving average posting a bearish crossover here, and is still aligned lower, with Bollinger Bands also extending to the downside. So from the one hand, the fact that it's now outside the Bollinger Band suggests that it's oversold, and at some point it needs to be corrected. But definitely for now, if I emphasize on the body of this candle, which is quite big, on the fact that Bollinger and the fast moving average are all three of them looking down, MACD turned negative with a bearish cross over here above the signal line. RSI just crossed below 30, okay? And stochastic over here also crossed 30, with the fast line sloping and looking lower. So in the tight near term picture, pound Swiss looks to have entered a negative outlook, and with bears in control for the time being. The 4-hour chart, pretty much the same picture, down. Moving average are sloping lower, looking lower. Let's check. We have also read the daily chart. For those interested in a daily chart and they are more or less of a medium-term traders, it will be key how this candle will end the week, because if it breaks the 38.2, okay, which is a key, it's actually an important retracement level. So the 38.2 is at 117.84, so that coincides with a break of 118 round number and a break of 38.2. Then this could open the doors down to March bottom. But for the time being, it hasn't break the 13.2. It's just for you to have it in mind, okay? Maybe for the next week. What is the best time frame for gold? Actually, I cannot advise what is the best time frame for gold. It's up on you, to be honest. It's up on your psychology, on how much time you have to spend, you have available for trading, and what kind of a trader you are. Are you a scalper? Are you an intraday trader? Are you a long-term trader? Do you I don't know, you are a trend trader? It's up to you. You need to stick on a time frame that you that suits your personality. Okay, there is not best and worst time frames, guys. You just need to decide how to stick on a time frame that is preferable for your personality, with your personality, and the time that you have to spend on trading. Okay, because you might have a second and a third job as well, so you don't have a lot of time. So if you don't have a lot of time, maybe you are considered trading in a medium term basis, like daily, weekly. If you have plenty of time, you might try to check the shorter time frames, like 1 hour, etc. Okay, so it's up to you pretty much, as long as you are doing a proper money and risk management. So we have seen gold. Okay, key levels to be watched is this area. A close above this area today will open the doors back to 2012 territory, guys. Okay, that's why the 1748 level hasn't been retested since November 2012. So yeah, definitely gold will be in our watch list for today and for next week as well. Okay, if it doesn't manage to break this level, then we could see a reversal, because this is a strong resistance level. So a reversal could be very, very likely as well. So gold will be monitored. For now, it had managed to break the latest fractal, the latest high. It broke the first resistance of the day. So if that continues, if I flip to the 30 minutes chart, if that continues, then it could retest the 1470, 74, or even the second resistance of the day at 1750 territory. dollar Mexican peso for Mr. Chanka. Okay. Let me just quickly go through that. Dollar Mexican peso. Okay. Just give me a minute. Dollar. Where is it? Why I cannot watch? Come on, it should be right here somewhere. Okay, let me find it over here from here. Should be. Okay, sorry for. Okay, here it is. Let me fix a bit my template. I like seeing the. Okay, interestingly. Okay, let me check a bit the daily chart. So in a down triangle, it's a bit like it looks a bit of an. Okay, it is indeed a. Okay, it's not in a triangle, but it has some kind of a downwards trajectory since the mid of April. So lower highs, lower highs, lower highs, reversed. The Wednesday moved below 20-day moving average, continue on Thursday, extending losses below 20-day moving average, and right now there's a bit of indecision. So let's flip to the 1 hour chart to see what's going on. So a big decline for dollar Mexican peso, so down. It's an emerging market. Emerging markets are like gaining some, they have some gains so far this year. Down, it didn't manage to test the support of the day. It moved down to 23.45, double top, trying to recover. It didn't manage. It rejected the pivot point and it has turned down again. So, okay, definitely. For the near-term future, I mean, based on the decline that we have seen since Wednesday, the asset never managed to move significantly, at least up to a 15% retracement in the midpoint of this decline. So for the time being, it could be negatively configured, and that could be proven also by the fact that over here that MACD is still very negative, even though we can see a bit of the histogram rising slightly above the signal line. RSI, however, is looking down. It's below 50, so negative bias is what I'm getting from RSI. MACD is a negative bias, but if we see a significant increase, rise of MACD above, then that could turn the picture. But yeah, momentum indicators are negatively configured for sure. The fact that it didn't manage to 3 times to move above pivot also strengthen the negative sentiment for the dollar Mexican peso. But okay, we have another questions. Okay, let me finish with dollar Mexican peso. So the fact that it didn't manage to break above the pivot 3 times in a row so far today keeps the asset like pretty much to the downside. So intraday at least. But you see, you should really let me check stochastic as well, but I can see over here that my fast moving average, the 5 and 9 exponential moving average in the 1 hour chart have clashed. Okay, so I don't have any signal from them. I don't have any either bullish or bearish signal. So we need to wait to see how this candle will close. We have another 7 minutes to go. Okay, but definitely the fact that it's below is pivot below all moving average, and below the 50, below the already like at the bottom of 3 days lows. It's adding further to the bearish outlook for dollar Mexican peso. So, however, the interesting part is that it has actually hit its 200-day moving average, 50-day moving average. Sorry, let me check also. Okay, the 200. Okay, it's far away, but okay, this is a daily chart. No, it's not a triangle. I cannot use I cannot connect the fractals, so I don't have a trend line at the bottom. But definitely, if it continues moving lower, the next levels to be watched will be the last week's bottom, but also April's bottom over here, 4 times bottom down to 23.30 to 23, 23.30. Yeah, if it sustains a move, if it continues moving southwards. So let's wait another 5 minutes to see how this candle will close. We have another question from Mr. Kingley. What values do you use to monitor your exponential moving average? So, okay, we have some kind of a actually in the 1 hour chart. It's something that Stuart found very useful, and when I initially saw it from him, I found it very, very interesting. So in the if you're trading intraday, like in a very tight time frames, like short time frames, it would be good if you like moving average to use exponential movies on average, first of all, because they are giving a smoother and a more fast faster and smoother line. Okay, but also because we are in a 1 hour chart, you need to reduce your moving average to like 5, 9 or 5, 10. 5 and 9 works quite well for the 1 hour chart, depending on the asset, of course. Okay, not all the assets are similar. There are some assets that they are extremely volatile, so sometimes the 5 and 9 exponential for 1 hour chart doesn't work properly, so you need to test it. But what I am using right now is for the 1 hour chart, I'm using 5 and 9 exponential moving average. If I go to the daily chart, I prefer keeping my 20, 50, and 200. Okay, if I am in a daily chart, I kept my initial template, which has 20, 50, and 200 in the daily chart, but intraday I'm using a tighter one. YouTube questions. Good morning. What indicator you're using on your charts? So the indicators that I mainly use is RSI, MACD, Bollinger's, and moving average, and I like also checking the pivots. Okay, that's it. Now, because you see sometimes that I'm having, so this is my daily template, intraday template. The intraday template, I switch a bit, and I, instead of 50-20 period moving average, exponential simple moving average, I use also the 5 and 9 exponential moving average in the 1 hour chart. Okay, but I like MACD, I like RSI, sometimes ATR. I'm using ATR as well. It helps with the stop loss and the target sometimes, and the and so on and so forth. It's the average true range after all. Okay, so give us a range for the asset. Can you touch on oil, please? Of course. Why did I miss oil? Yes, Mr. Dlamini. Yeah, oil. Okay, something that I didn't cover in my briefing earlier. So it was the fact that US oil, actually the last was 7 days in a row, no more than, like, okay, general, like in May, it's been into the upside, a bit of a consolidation the last 2 weeks, but since yesterday it managed to jump to the upside. Okay, breaking the 26 level, breaking the 27 level, breaking the 28 level, and right now is getting ready to retest the 29 territory. It's just a breath away. It's just the 15 pips away from it. So apparently, okay, the oil the oil actually hit 6-week high so far today, after Saudi Arabia cut sales to buyers. Okay, so this, along with the fact, and I put that as a caption as well, Let me see whether you can see it. Perfect. Saudi Arabia cut sales to key buyers, and with EIA that we have seen actually was on Wednesday, okay, which highlighted that demand is improving. We have a rise, a boost on US oil. And don't forget, also, we have the expiration of the contract today of the U.S. oil contract. Is the end of June's of May's contract. So that's something that um, dominates the asset as well. So it broke above 28. A slight correction down to the 20 period moving average in the 1 hour chart, and again a boost to the upside. So you can see that MACD over here. Let me remove and hide the headline. So MACD is at an extremely positive area, far away from zero. That's extremely strong. So suggesting that, you know what, I am not overbought yet. There is still a lot of momentum. The same stands for RSI, because it's, if you follow a bit, okay, it was moving up, correlated with the boost with the price action up. It says okay, overbought, slightly small correction, but again up. Didn't break the 70 territory. Right now is like struggling to break the 70 territory, but is the fact that it's above 50, well above 50, suggests that the positive momentum is still here. Bulls are still here, are still in control. So we might see a bit of a correction because it touch and close outside the Bollingers. But for the time being, any turn lower could be interpreted just as a correction of this swing to the upside, as long as it kept the floor above the 20 period moving average. Let's have a look on stochastics, which are giving us a faster signal. So indeed, that bullish cross came up. Should be okay. That bullish cross was seen like just 2 hours ago. So yeah, stochastics could help you with your intraday trading as well if you amend the settings accordingly, of course, in order to satisfy your time frame and your strategy. So let me check the 5 and 9 exponential moving average. They have crossed initially back in yesterday morning in Asia session, more precisely, and they are keep moving to the upside with 5 above 9. So the 5 above 9 means that in the near term the momentum is still to the upside. So any correction is just a correction as long as it kept above the 20 period moving average. That was for oil. So if that rally continues, if that rally continues, and more precisely, if it breaks this top over here, which is back in the 2nd of April, then this top is at the 29.10. So if it closes above it today, so the next levels to be watched will be at the 35 territory. The next real resistance afterwards, after this break, is the 35 level. So today's closing will be interesting as well. So it will give us an advanced picture for next week. Because at some point it needs to close this gap, but it's also providing a strong resistance. So today's closing is significant, or even Monday's closing as well. So yeah, let's wait and see. For the time being, momentum remains to the upside, positive momentum. We have the new 1 hour candle. Let me flip to the 30 minutes chart. Up, closes strong. Let's have a look. We might see similar pullback back, as long as we don't see the 30 minutes chart like significantly closing negatively like that one and that one. We are still to the positive outlook for US oil. That was for oil. Hopefully I managed to fully reply to your question, Lami. And something else, okay, something that I didn't explain, I believe. Okay. Don't where is it? Where is it? Let me quickly have a look. Okay, kind of find it. Okay, I will come with what I wanted to tell later on. So pound yen, I like how your analysis pairs. Please, how is pound yen looking like? Oh, Peter, pound yen was actually one of the biggest losers today. It was actually our number one loser when we start the day today, I mean, in the European session. So you can see that after topping at 131, it drifted lower. So yen and dollar are one of the biggest gainers so far today. Okay, so safe havens, the safety demand is all over the place. That's why we've seen gold rallying as well. Don't forget the pound is under pressure for all those reasons that I mentioned, along with the fact that UK needs to exit, and also the fact that it's very high in infected rates, and also the fact that it's like is behind in the terms of reopening its economy as well. So that's why it's facing major losses. But if I just have a channel, like, okay, oh, sorry, that's a mistake. If I just put a channel from 2 months top, okay, 2 months top was, I think was, okay, let me double check. Yeah, was back in April 9th. So moving to the downside, and if I go back to the 1 hour chart, okay, you will see that down, breaking 20% for Fibonacci level, 20-day period moving average, having a bearish cross of 5 exponential moving average below 9. 9 is with yellow, 5 is with green. And this bearish cross indeed came true, down, and they are still looking to the downside. So we have negative momentum for pound yen as well. So MACD turned negative, RSI 35, trying to recover for 30 territory, but didn't manage to sustain any move above it. It's like slightly flat right now. We may see a bit of a consolidation because it's like outside the Bollinger. So the fact that RSI has flattened suggests to me that we might see a bit of a 1 or 2 hours like consolidation before another attempt to the downside. Stochastic, we have a bullish cross over here, but it didn't manage to cross above 20. So we'll ignore it for now, because since it didn't move above it, this doesn't prove anything. It's just, again, it's a negative signal. Once again, remember, we had a bullish cross again here, but it didn't manage to sustain any slope to the upside, at least above the 50 level. 50 level should be, come on, around here. It didn't. It was well close to the oversold territory. Right now it is within the oversold territory, so that's weak. Negative, flat. So consolidation might follow, because it's like oversold, but the overall picture remains to the downside intraday. In the 4-hour chart, the same. Traded below all moving average, stochastic down, MACD down, RSI flat, suggesting consolidation. Daily, we had a bearish cross over here, and it's ready to cross down to the oversold territory. MACD negative, RSI down, looking at to cross the 30. So overall picture is negative as well. So more questions are coming apparently. So that was pound yen, my dear Peter. Just reply to that. Sorry that you had to wait. I saw that you have repeated the comment. Not sure whether I missed a question, but since I don't see any more questions, I would like to flip a bit, okay, to the reaction. Let's go back to dollar, okay, and we will see that. Let me get back to me right now. So okay, so we have seen, guys, sorry, blank picture for a second, sorry for that. So we have seen that it's down. That's dollar index, weak dollar after the data, down to 100, retesting the 200-day moving average, the period moving average. Sorry, this is the first 30 minutes chart. So so we have some kind of a pullback similar to what we have seen in the on Wednesday. So down 106, a key level to be watched. So a break below it could open the doors to 99.64 and 3 days lows. So yeah, let me flip maybe put my 5 and 9 levels. So still, you see, this is the 5 and 9 exponential moving average. They haven't confirmed a cross yet. So this was a reaction after the data, but since the reaction initially, if I put to the 1 hour chart, the reaction on the data was negative. That was indeed reasonable because we have seen actually we have seen retail sales at record lows back in 1992. Its components also at record lows. This is something that, of course, with a blunt to 16.4% drop at all-time lows, and with auto sector decline to 1700s, theoretically, indeed, the dollar reacted properly because this clearly is the reaction of such a dismal retail sales from US. So it's down, but didn't manage to break below the 100 level. So key round number. So okay, for the time being, it broke below the 2 days low. So MACD just turned negative. RSI is like looking to downside. So we might see further decline for the very near term picture for a dollar. So if I put my Fibonacci and this rebound moves below 23.6, below 38.2, so the next level to be watched would be the 100 support level. And if it breaks that as well, then we should really turn our attention to either the 61.8 in second support of the day, which as a 99.95, just 5 pips below the 100. But if the candles continue to be decisively strong, the real support could be seen back in 12th and 30th of May. So back to the 99.60 territory. Okay. So it seems that the better than expected Empire State Manufacturing didn't really help the dollar or the treasuries as well. So in the equities markets, let's have a look in the equities market because they should have been actually to the downside on this data. Okay, ahead of the data, it turned to the downside. That's S&P 500, and the decline continues. So they have extended declines. They're down to more than 1%. But mainly this decline has to do with the increasing trade tension with China. Remember that report from Reuters that they about the Huawei supply and the block from US and so on and so forth. So the US equity markets more or less are under pressure because of the renewed US-China. Let me put that in the caption as well, just for you to have it in mind. The US indices are mainly driven for the time being on the new US-China trade worries. I missed an S over here. Sorry for that. Down, okay, below the pivot right now. But the fact that, let's have a look. The fact that my Bollinger's has flattened. This is 2 hours bottom. Suggests that, you know what? I might have reached to my bottom and I might continue to the sideways because RSI has flattened as well. 20 period moving average also flattened. Let me have a look to my fast moving averages. Okay, here they are. Okay, still sloping to the downside. Okay, they remain to the downside. That's fair enough. But that bottom is trigger my attention, and the fact that at that bottom we have also a flat Bollinger. So that decline might run out of steam. Okay. And this might be the time for a rebound, but we need a confirmation. We need at least this candle to close above or at the similar territory as this candle over here. So like at 28.35 or even higher. Okay. So yeah, we need a strong 1 hour candle over here to believe that the decline has reached to a bottom and it's a time for a reversal. Okay. Any other questions? Something that I mentioned? So US equities down under pressure. European, however, equities indices are a bit mixed. Rebounded overnight. A small pullback in the European session, but they managed to sustain gains, so they remain to the upside. German DAX at 0.6% firmer. FTSE, I'm not quite sure for FTSE. Let's flip to FTSE. So the DAX, by the way, is above its pivot. So it's like holding support. FTSE also holding support above pivot. After the rally, a bit of a correction, and right now is stable above pivot. A break below pivot could take us back to 56.74, but a rebound and a move, actually a rebound will be seen if we see a move above 5800s. Then a move above 5800s could turn the attention back to overnight highs and the 58.70 territory, first resistance of the day. That was for FTSE. Yeah, I think I'm done with all this. I think I am. There's nothing else to be mentioned, unless if you have any questions. Now is the time to go to make one, guys. That's the final call for questions. Okay, Mr. Alalea. So please check dollar CAD. Yes, sure. Right now. So, okay. Dollar CAD 1 hour chart. I will put the 30 minutes chart, to be honest, so okay, the initially dollar CAD today in the Canadian dollar actually have been, I'm not sure, can you see my screen? Yeah, okay, dollar CAD, guys, 30 minutes chart. Okay, sorry, for some reason I cannot show the questions, so it's a shame. So dollar CAD was Canadian dollar actually was on beat because it's oil correlated, so it was in line with the beat of oil this morning. But apparently, since the EU opened today, not EU open actually, like 2 hours after the EU open, we have seen it moving to the upside on the dollar demand. So if you check 11 o'clock, okay, dollar CAD, it was the rebound hour. So let's check a bit of this says okay. So here it is, the rebound for dollar index, up, up for 4 hours in a row. So this move of dollar CAD to the upside with Canadian dollar facing losses against dollar, it had to do with dollar demand. But right now, that the dollar has turned slightly to the downside after the data, we have seen Canadian dollar getting some of the losses back. So there is a bit of not. It should actually Canadian dollar from fundamentally wise, it should have to go along with the oil price, but because we have dollar in demand, this is what driving the dollar cut and retested once again the 140 territory. Turn back down again. Right now it is retesting its pivot point of the excuse me, the pivot point of the day. Excuse me, guys. So right now, the dollar CAD, it's like if I put this is a 30 minutes chart, so you can see that we have a bearish crossing stochastics, and stochastics are still looking down. So that suggests that in the near term future, we might see further move to the downside. However, MACD and RSI are still above 50, are still in a positive territory. So suggesting that, you know what, this decline has some kind of a limitation. Okay, and I believe that indeed it has some kind of limitation because oil, which is correlated with the Canadian dollar, is doing great. So this decline, this upside, okay, sorry, it was mainly ahead of the data. So we might see, and this decline was after the data came out, which were actually very, very dismal as we already seen. But according from the technical perspective, dollar CAD is a bit weird because we might see a limited decline because the overall picture, okay, if I shift to the 1 hour chart or the 4 hour chart, you see that it has posted some kind of a steady picture between 140 and 140, 150. So this decline, the decline that we have seen the last 2 hours, less than 2 hours, could find a limitation, could be just intraday or in the very near term future, since the bulls sustain the control, sustain at least so far the control. You see, RSI didn't cross below 50. Okay, it's still at 52. MACD is ready to turn positive. So the negative momentum over here, it has eliminated. Stochastic has a bearish cross, but stochastic is my fast momentum indicator. So if you're a 30 minutes chart, then stochastic is just fine. 30-minute chart trade is just fine because it did suggest that we will see further decline, but a temporary one. So there is further steam to the downside according to stochastic, but for it might find some kind of a limited decline because all the rest moving average, all the rest momentum indicators are flat or positive configured. Okay, so for the time being, let me check the daily chart, and don't forget that we are in a 4 days in a row above 20 moving average, so the asset remains quite sideways to positive. It didn't manage to close below the 140.50 territory for 4 days in a row. So dollar CAD, okay, for the time being is quite weak. It's quite weak, but this looks to be quite limited. Yeah, especially 30 minutes chart. But let me check the 5 and 9 as well. Things are quite weird for that. Okay, 5 and 9, you see 5 and 9 haven't crossed. They haven't posted bearish cross yet. So I can say that the overall picture remains positive despite this 1 hour bearish candle, because MACD is okay. RSI managed to sustain above 50. My moving average, the intraday ones, are still positive. So this might be just a correction. And so the decline looks to be limited for the time being. That was for gold, for a dollar cut, guys. So any other questions before I end the session? Okay, I will wait for final questions. We have seen the data of the day. We have seen that we had a huge drop in the U.S. industrial production. We had a huge drop in the retail sales. We have seen a renewed tension between U.S. and China that actually pressure U.S. equities and U.S. equities as well. We have seen U.S. oil spiking higher because it's the end of the contract, but also because the Saudi trimmed supply and the IEA inventories are positive on demand. So that boosted oil to the upside. What else? What am I missing? I think I covered everything. Gold to the upside. Let's have a final call to back. Okay, extending to the upside. Outside Bollinger Bands, so it might face a bit of a correction. Up. Let me check the headlines. Maybe something new happened. We haven't seen dollar yen. No one asked for dollar yen. So let's finish the session with dollar yen. Dollar yen. Okay. That's nice because it keeps a move below its 200 moving average since European session. So 6 hours in a row is below its 200 hour. Okay, sorry. So that's not 200, that's 50. What's the 200? Oh, 200 is up. Okay, let me fix a bit my template. Sorry for that. Okay, here I have my simple template, my proper simple moving average. Okay, that's the daily chart. Retesting the area below the 20-day moving average for a third day in a row, but I am mostly interested in the 1 hour chart. Okay, you can see that 200 period moving average provides support to the asset since May 11th. So the whole week, the 200-day period moving average provides some kind of support for the asset because it was retested several times but never managed to break it. So far, despite this sharp decline, managed to sustain above and move above 200 period moving average. But what a move below it will mean? A move below it will open the doors down to 106.60, 106.40, or even 106.17 territory. It will open the doors to these lows over here. So now, okay, how many candles to the downside? That's 12 hours to the downside. Let's see the intraday picture. Let's put the pivot points. Okay, it's below its pivot, below 20 period moving average, with the exponential moving average, the first ones negative, aligned lower. However, they are not so sharp. They're not looking to the downside. They are a bit like ready to flatten a bit or something. So we might see a bit of a consolidation because it's oversold, and you see it didn't manage to break for 3 hours in a row, the first support of the day. So it might find a bit of a support, a consolidation might follow, and not a rebound yet because we haven't seen a move above the 2 hours high. So a move above 107 could open our attention to the upside, could turn our attention to the upside. So 107, close above 107 in the hourly chart could alert attention to 107.20 or even 107.36. But as long as it's moving below 107, and if it breaks the 106.88, which is the first support of the day, so the next levels to be watched would be 106.73 or even 106.53. Let's see the momentum indicators though. Yeah, 40, trying to recover, but I will put the 50 line on just to be sure if whether it will cross it or not. Okay, somewhere here, never mind. MACD is ready to turn negative. Okay, so that suggests that the negative momentum, the bears, could soonish take the full control of the asset. And let me put also my stochastics, and the first one already overbought, trying to recover. So is it time for some limited wrong line, so it might be time for a bit of a conversion to the upside, but yeah, it will be temporarily, I think, because the slope of stochastic is quite narrow. So yeah, let's wait and see. We need to see. Okay, you should add the 50 as well over here, just to be sure that if you see a break of stochastic above 50, then it's time that then a rebound will be confirmed. Okay, guys. But the fact that it's above the 200-hour moving average is quite positive. Yeah. So the 200-hour moving average. So let me put the 200-hour moving average in. Let me turn this one to 200-hour moving average. So because it didn't manage to close below it for the whole week, a close below it today will increase the level, will actually reject this important technical support level and could turn the attention to the downside. So yeah, as long, however, as is above it, if it stays above it today, or even if it extend and move above it today, then it means that the bulls hold the advantage. Okay, while they move below it, it will expect stops to be triggered and a profit further to the downside. That was for dollar yen. Guys, I am quite tired, so hopefully I replied to all of your questions. Hopefully I managed to help you after the data that we have today, the USA retail sales. So I had a final call for questions, but apparently we don't have any further questions as I can see. So I think it's time to close the session. I will briefly say that, and I will share the traders board, Forex trader boards, which will clearly show to you the full picture of the market right now. And let me share it with you right now quickly. Come on. Here it is. So this summarizes everything. So dollar relatively a bit, but not against all other currencies, not against euro, yen, and Swiss. So it's mainly extending gains against commodity currencies. Euro has managed to recover some of the gains, losses that we have seen. The major loser is pound, Kiwi, and Aussie, and yen, along with Swiss, are two of the main beneficiaries so far today. So, or for now, for in the US session. Okay, so let me bring back. Okay, here we are. So so the pound is underperforming against the dollar. okay, against the sensitive against the dollar, and due to the selling in US and global stocks. So cable is down. Remember all the things that we mentioned. Yen is on beat. And in general, the safe havens, yen, Swiss, gold as well, because of the worries and the retail sales outcome and the worries and the concerns of a more stimulus and the concerns of negative interest rates and so on and so forth. What else I wanted to summarize? Indices and US futures and US futures under pressure, European futures firmer, sustaining some of the gains that we have seen since yesterday. What else? Oil remains on beat. Okay, it's at 6-week high due to the Saudi trim supply and the positive demand data from yesterday. So yeah, that's the summary. I think we've covered everything. Hopefully I didn't miss something. I would like now to help you to thank you, for joining me. Hopefully I managed to help you with to give you an understand to help you understand what happened today, how the data affect the market, what are the main concerns out there that actually add further to the downside sentiment for markets, and what are the key things you should be watch for the week ahead. It's all the things that we mentioned: trade tension, COVID as well, the contraction data from all over the world, Europe, China today had a very dismal retail sales as well, and uneven recovery signal. US right now, again, dismal data and so on and so forth, and the fear of more stimulus and negative interest rates are also at the backdrop, along with the fact that UK needs to and the membership with the EU single market this year. So thank you very much for attending. I will end the session. Hopefully you enjoyed. For any help, you can find us in social media and etc. We are here to help, and we're glad to help. And hopefully you have enjoyed as much as I did. Thank you very much for joining me. Hope you're having a great day ahead and a great weekend ahead. So see you again next week. Bye-bye, guys. Thank you for watching. Bye-bye.